This is exactly what I think investors have to be careful of over the next few weeks. We're pretty much done with earnings season now. So we do have employment next Friday, which people will trade on. But I think the real fear or the real trap is going to be the headline news like this is going to take us up and down day to day, a lot of intraday volatility, and I think this is where you really have to be disciplined. What's the good companies? As John said, if you see a company's beaten up that you like, it's time to step in and buy them. We just saw the retailers tell us how great foot traffic has been in all their stores with earnings. So there's a lot of momentum going right now in the market, and I just don't see what's going to immediately end this momentum. Yes, I do think over the next 2 to 3 weeks will probably be much more volatile than we've been used to.
Okay, I'm glad you used the word momentum. It's the word that I was going to use in my next question to you, Jim. Is there enough momentum to keep stocks climbing, to buck history, which has been unkind to investors as you start to move into the fall?
It certainly has been unkind. And I think the answer is yes, there is enough momentum. But echoing what my two colleagues have said, Scotty, I think there's going to be volatility. And August was a beautiful month, right? The market shrugged everything off. Manafort, Cohen, all these things got shrugged off. Trade issues, if they weren't shrugged off, they were looked at as quite positively. I don't think the market can continue to shrug off trade issues and the political shenanigans that have been going on, particularly with the election going up. That doesn't mean, to answer your question again, that doesn't mean the momentum's broken. I still think we're moving to the upside. The problem is there are going to be bad news days like yesterday. It's not just going to be something where the market shrugs off everything. And if Mueller comes out, there's no reason to know that he will or will come out before election. That could move the markets.
So, you know, the Dow's down 90 plus. It's obviously focused on every word that comes out of D.C. with the trade talks. But given the kind of month we've had, it's been a pretty good summer, and maybe it was a late summer sizzle we started to get. Bank of America's flow show, right, gives you an idea of sort of where investors are thinking about placing their bets. They're still overwhelmingly bullish. $8 billion moving into equities, barely a blip moving into the bond market. What does that tell you?
Well, JFK said, Judge, the time to fix your roof is when it's sunny out. And I think the president, because he's had the momentum in the market and in the economy, has been willing to, basically tilt at these windmills, go after China. I mean, did he really need to, on the heels of having a more or less victory of sorts with Mexico, did he really need to go after Europe and China again this week? Ratchet up that trade rhetoric again? No, but on the other hand, again, the time to fix your roof is when it's sunny out. I mean, he's got a lot of positive momentum, to Jim's point, and it's not really going to be derailed by just tough talk on trade. If indeed, after that quiet period, or the comment period rather, goes away in China, if we really do see 200 billion in new tariffs hit and so forth, then to Jim's point, yeah, that can make an impact in our markets. But so far, it hasn't been playing out like that.